Candle by candle psychological analysis. This is where we're taking a look at the 5-minute chart on the S&P and just going candle by candle and seeing what's going on and looking at the intermachinations of the markets and kind of building a story and looking at what's going on and seeing how we can better analyze the markets and learn from these moves to better ourselves as traders so that we can get better and better every single day. So I like starting off on the S&P with a 5-minute chart, in this case looking at where we're opening up, and we're starting off with a gargantuan gap to the upside. Now, this isn't just a big gap up, oh, awesome, right? There's a lot more to it than just this. Settlement price is way down here. Yesterday's low, it's this red line down there. Yesterday's high is this blue line, bluish, greenish line, whatever you want to call that right there. So notably, where the market opened up is barely an outside gap up. It just barely opened outside of that high. But here's the thing. This is the open of a new month. We're looking at March 1st in this case. So being the first day of the month, we're not just gapping higher with a big gap up. We're gapping higher into a new month. And it's not just any month. It's the end of the first quarter of a new year, right? So there's a lot of stuff going on in March. And obviously the bulls mean some business. We're gapping up heavily out of the gates here and using yesterday's high as support. So one of the first things that I want to do is take a look at the volume on the first 5-minute bar and see what can the volume tell us. Is it giving us any clues? So let's look at the volume on the first 5-minute bar, and that will give us an idea to see kind of who's coming in, where they're coming in, etc. So if we look at this area, we can see that there is a big chunk of volume that came in right there at around 38.65.50. That's the POC point there, at least. So with all of the majority of the volume stacking up there, that'll be our point of interest. That's where we'll want to kind of see what does the market want to do from that area. Once we've got that, the next step is locating some type of structure, some type of reasoning as to what is going on. And if we zoom out a little bit further, we're opening up after, well, a pretty big failure on the lows. Now, this is just an RTH chart. We're not looking at ETH in this case. So they may have continued down, but from an RTH perspective, they didn't. That's a big failure. We've got a higher low. And now, well, when a higher low, you got to have a higher high to confirm it. And they gapped all the way up to it. They kind of finished the job. So this initial drive down looked really, really strong. And from a trend perspective, we've got those lower lows, lower highs. Then it did this where it made that higher high. Okay, well, higher low. Oh, no, looks like it's falling apart. Oh, wait a minute. We're going into the end of the day. We go into the weekend. We go into a new month. And then bang, all the way up. All of a sudden, all the shorts who are down here are thinking, oh, crap. There's a lot of people who are going to be stuck on the wrong side of things. And along with that, a lot of bulls who are thinking, we got him. This is the trend confirmation. All of a sudden, out of nowhere, all of this excitement starts ramping up because, well, they kind of got what they were looking for. We got the completion. We have the confirmation. We have a bull trend to the upside. As far as upside objectives, we could potentially be looking at maybe some rising levels, considering that this was a strong breakdown. And the fact that it gapped all the way up, we could look at the support that was going into that move instead. So if we look at a wider top of a channel or top of a wedge, something along those lines, it could be a little bit further up. It could also be looking at a little bit more of a narrower type of resistance across here. So that would suggest that we've got a little bit further to go, but potentially a lot further to go if it really wants to keep on jumping. We go into the next candle, and this is why I don't like trading the first 5 minutes with more than scalps. We've got a big trap on the highs. It got buyers to essentially try to buy the top, and it dumped back lower on them. Here's the key, right? We tried closing and breaking back above. All of that volume stacked up. Then it slid all the way back down to the low, but it never broke a new low. That's a big part of this, because remember, we're opening up above that high. We're gapping outside of it and they're staying above it. So as long as they stay above it, it's still an outside gap up and they're maintaining that strength. So this looks like the bears did a lot of work, and they did, but they didn't do enough because it didn't break down through the lows. They couldn't quite finish the job. Now, it's not to say that the sellers can't come back in underneath this bear bar, but this isn't enough to necessarily take away from the bulls. And in fact, the bulls might actually still utilize this as a pullback pullback to buy in, knowing that the risk can be really, really small. They don't have to risk that much below inside of the previous high, but if it does continue back up, we've got movement all the way back to the top of the wedge or way further up. The reward versus risk is incredible for their point of view. So buyers will be looking to utilize this to their advantage and try to kick this back up. And that's exactly what they did. They kicked it right back up again. And now we're getting a bit closer to that physical test of the top of the wedge. This is also beyond the first 15 minutes, which is what a lot of traders will wait for. Notably, what has happened here, we started the day off with a big volume node right there at 38.6550. The market did close above that. Bar 2 closed underneath it and tried getting the sellers back in, but they failed, like we were talking about in the context. The buyers took it back up, and now we're closing back above that volume node once again. We are still really pinned to the top, so this is going to be tough for buyers to break through, but it's a good start. This is what they're going to have to get their hands on if they're going to want to keep this going. It's still more likely that buyers would probably want to buy on a pullback, and what better place to pull back to than the major volume node at 38.6550. So a lot of buyers will still be waiting. They'll still be waiting for the dips. It also looks like there is a little bit more volume that built up at around the 38.64s. So in that area, that's a big zone that buyers would very much rather be buying into rather than having to buy way up at the top at the high of a wedge. Just doesn't make a whole lot of sense. So we wait and see if the buyers want to take it above the highs or if they're going to pull back. I would much rather prefer a pullback here. I think it makes a lot more sense. Yep. And buying above this bull bar, they just fell flat on their face. There's a lot of resistance up here. It's not a big surprise. I still think buyers have it, right? We're still holding above the previous high of day. Everything is doing what it needs to be doing. It's illogical to buy way the heck up here hoping for higher, because that's all you're doing is hoping. A lot of buyers will be looking for reasons to buy low. Now, if buyers do have a lot of strength here, this is where we can get a little bit trippy-trappy and we can kind of mess with people a little bit. We've got a fantastic bear bar. We just saw the sellers try, and we're coming off of a major zone of resistance. Now, given the context, we know that price still closed above 38.6550, and that's a really big deal because they closed above volume. And that volume on the first 5 is the important part here. It's not to say that sellers can't take it lower, but now sellers for them to take it, they're going to have to sell through all of that too. And that's going to make it a lot harder. So what a lot of buyers will do, knowing that they want to buy cheap, but they don't know necessarily where cheap is. It could be, maybe they miss the opportunity down here. Maybe it does go a little bit further. Maybe a shallow pullback is all they get. Either way, buyers don't want to buy way up at the top. So what we can look for is looking at the fact that sellers will want to take this, but it's a terrible entry for the sellers. In that, for the context that we just talked about. Yeah, they're coming off the wedge, but they're forcing themselves to have to shove through all of that support in terms of volume. And given the amount of bullishness and context of the day, they're making it real hard on themselves doing that kind of stuff. So buyers will absorb those orders and wait for those sellers to try to sell down and just gobble them up like they're going out of style. And that's exactly what they do. They gobble them up like it's going out of style and shove the market right back up. Now, here's where it gets a little bit rough again, because what's happened? Well, we trap the sellers, which is great. We have a beautiful move back to the upside, which is great. It's doing what you expect it to do, but now it's back to the high again. It's not giving any chances for buyers to really take it back up. The only difference here is that if it does want to continue higher, maybe it's starting to break above the top of that structure, but again, it's forcing people to buy high, and that's going to make it really difficult. The one caveat that buyers may have, or at least some wind in their sails, is the fact that the sellers just got trapped so aggressively. Any of those sellers who are in, their stops are going to be above the top of the bear bar. They might have even moved their stop above this bull bar. Either way, we're going to start triggering those stops above this, and maybe that's enough to try to get things going. To me, I think it makes a lot more sense to allow the buyers to take it further and prove themselves. Let someone else put their money up and do the work, and then look to pick up the pullback if it will let you. I would rather take the risk of missing the trade and avoid a total failure rather than being the first one to the party. So we've got the bull bar, and it follows through with another bull bar. Now, it is a pretty small, little teeny tiny one, and that would make sense because a lot of traders, myself included, like we were just talking about, is thinking, I don't know, I don't really want to be a buyer way up here. Just every other time that it's tried doing it, it's failed. Well, this time, they actually proved it a little bit. Now, does that mean, oh, sweet, buy at the close of this bull bar? No, right? That's still buying high. We have to keep this in context. We're talking about the S&P here. This is one of the world's most efficient markets. We're probably going to get a little bit of a pullback if buyers want to pull back. If they haven't had a chance to get in, or if they're waiting for extra proof, like actually closing above some of this rising resistance, which we've now done, buyers will be looking to buy underneath the bull bar. Looking at the close and then offsetting the close by a point or two, buying a little bit lower, buying a retest on the inside of that wedge top, something that's just a little bit further back. Again, buyers don't want to buy way up here hoping that it goes further. They want to buy cheap because that limits the risk. That way, if they're wrong, oh well, not a big deal, but it opens the door to when they're right. That's where you get those monster 5, 6, 7, 8 to 1 runs into those monster areas of interest. So buyers are still interested for sure, but they want to buy a little bit of a pullback underneath that previous bull bar, at least. And that, geez, oh Pete, we got that dip underneath the previous bull bar, and it went full out bull engulfing. Not only did it go full out bull engulfing, but it did it so aggressively that we actually had candle gapping, where it closed here and opened here right on the next candle. Remember what we just said? We're talking the S&P, one of the world's most efficient markets. Well, wait a minute. If it's the most efficient market, why are there gaps from candle to candle? That's an inefficiency. That's a sign of inefficiency, at least. That means that buyers were so aggressively jumping into it that they didn't even have a chance to respond. It just went straight through it. That's a really bullish inclination. Normally, you might not want to be a buyer above and try to make this go ripping further up. But if we can get a small consolidation, again, we don't want to buy high, but maybe we can get a little flag. If we can get it with an engulfing candle, I love engulfing candles retesting the lows of themselves. Anything that's just a little bit cheaper, maybe even a retest of that previous down here, just something a bit lower that will definitely get buyers interested to try to shove the market back up. We also have to keep in mind that sellers are still potentially stuck and looking to get out. So any pullback that they get, they're going to utilize to try to jump ship. Really, really tiny little bear bar here consolidating. That might be a sign of a possible flag. And what's better here is that it offers up another opportunity for buyers to do what? Right? Well, they filled in the gap, buy below the bear bar. We're trying to buy cheap. We have a bear bar that just triggered over here. That one failed. I would expect the exact same thing to happen here. We just saw them try below a bull bar and they just got decimated. So what's the chances that a weak garbage bear bar like this is going to do anything when it's trying to push through support? Nothing. my bet's on the upside here. It looks pretty good. So a lot of buyers are going to be waiting to buy on a little bit more of a dip. Come back down towards the low of this candle, towards the 70s, 71s. That's where they're going to show some interest. Yikes. We go into the next candle and it's an inside bar. Now, this isn't technically speaking a double inside bar because this bear bar did actually go above that bull bar's top by just a little bit. But from a body perspective, it is, right? We haven't gone anywhere. We've got two bars that are just stuck inside that engulfing candle. And whenever you have two inside candles like this, that's a sign of accumulation. That might mean that it's going to break higher, might mean that it's going to break lower. Either way, something is probably going to happen sooner than later. If you're long, buyers are obviously going to be hoping for a continuation to the upside, and you can kind of see that as a little bit of a flag or a pennant. But if sellers are in this, which they very well might be above these previous highs, they're going to want to see this break down and shut down all of that bullishness. So although it looks like nothing's really happening here, this is a really important area. We need to see how the market responds to this. What do they want to do with this consolidation? We can also use volume to give us a little bit of a clue. While the market has been rallying higher, we can see right there what has been going on. And we're just, it really didn't help a whole lot. We've got the POC of the entire thing, which is only a tick higher at 65.75. It's not even much of a change there. And we're building a bit of volume. That's about it. So again, we're in a balance. We've got to have more to the story. We're missing an important part of this story, and right now that's just a matter of time. Not a whole lot of time, apparently. We've got one gigantic bull bar to the upside, which just completely shut down any chance that the sellers had. Sellers were looking for that little wedge, that little pennant formation, that consolidation to break down and shut down the bulls. That didn't happen. Now remember, we were talking about buyers not wanting to buy too high, buying low, buying dips, buying underneath. But in this case, we have those two consolidations and they were never given a chance to buy underneath it. Now we've got a really strong bull bar to the upside and potentially some candle gapping, depending on where the next candle ends up. So there's a lot of potential to start rallying up towards the top of the channel. And with that amount of space left, there's plenty of room for even scalpers to get in on that. They might not pull back very far. So this is going to be an area where if it's going to go, it's probably going to go sooner than later, really, just given the pent-up energy that's happening. As we move into the next candle, ooh, what a lovely one that is. Basically a big doji, but there are a few really big caveats here. I know it doesn't look like much has happened. It's just going up and up and up and up. But look at what it's doing and how it's doing it. It's breaking above that previous high, right? You can see that little poke above there. If we were to draw a line across that top, we broke above it. And it didn't just break above it in a small way. It shattered through that resistance. This is the largest bull move that we've seen since the beginning of the day, aside from like this engulfing candle, which it got stuck in for the next 10 minutes. So with this bullish breakout, one of two things is going to happen. We're either going to get stuck like it did last time, or we're going to see more continuation up. Well, what's one thing that's massively different that didn't happen over here that is happening over here? We've got some big candle gaps going on. The high of that candle to the low of that candle suggests that there's a lot of energy that's looking for more continuation to the upside. If we look at the bottom of that candle to the bottom of the gapping point right there, so that would be this as the gap, this little box zone there, that gives us a projected upside target for buyers in this case. If I can get this stupid box to line up the right way, there we go. Gives us an upside objective of right there. That would be the 1-to-1 move, and that price specifically is $94.50. So as far as upside objectives on bull candle gapping, that's what buyers are looking for right now. Keep in mind, buyers still want to buy cheap, but we've got candle gapping going on. It's not likely going to get much cheaper. They'll be buying on the close, buying little 1-point offsets, 2-point offsets if they can get it. Maybe a dip into the gap a little bit, but realistically, buyers are going to be a little bit more pent up on the energy side here. We get a bear bar down. Now, that is something that a lot of buyers weren't necessarily expecting. We still have the candle gap open. The gap is still wide open, but that does narrow the overall objective. It's no longer looking at the top there. We can narrow this in a bit closer, which gives us upside objectives a bit tighter in here. That's going to be at 91.25. So with the upside objectives at 91.25, nothing has really changed per se. We're still incredibly bullish, and if anything, buyers have just been given a chance the first time in a while, dipping underneath a previous candle, being able to buy into it. The last time that happened, it got eaten alive. The time before that, got eaten alive, and that was when they were trying to push through resistance. We're through resistance. We're not even at a level yet. So likely buyers are going to be all over this thing. It's coming into 10:30. It's getting a little bit later into the afternoon session, but realistically, I just don't see the buyers wanting to stop now. It wouldn't make any sense. Nice big bull bar right back to the upside. Keep in mind, completion of the candle gap is going to be at the 91.25 area. Until that's filled, buyers are going to keep buying. We've got a bull bar. Buyers will buy it. If we get a dip on that bull bar, buyers will buy it. If we get a dip underneath the bull bar, what do you think they're going to do? They're probably going to buy it. So we're looking for continuation until we hit that objective. And especially given the time frame going 10:35, 10:40, going into 11 o'clock, that lunchtime session, that's a big objective. If they can finish that off, we'll probably go into a range for the rest of the afternoon while everyone else takes off for lunch and kind of pockets all of the profits. More continuation up. Buyers are still aggressively buying. No change in the objective. And, hang on. Did they actually test it? No physical test yet. It came real close. But now we've got 3 major bull bars in a sequence. And what else is happening? Right now, we have more candle gapping. It's not very big, but that candle gapping does suggest that there's potentially wider objectives. So not only are we looking at this target here, which didn't fill yet, that's the only reason this is still applicable, but now it tells us that we could potentially look even further. Now this may have the potential to start lifting up towards the 93.25. It's getting even more aggressive. You can feel the buyers really ramping up. We hit the objective and look at the response to that. As soon as it hit that first candle gap objective, look at the wick on this thing. It just gobbled that thing alive. So much so that it actually backfilled the gap. That gap now closed. So that is no longer there. That means that that larger objective is no longer there. That means that now that it's gone all the way back up to the highs, we've now created a scenario where if buyers weren't sure if this 91.25 was going to be an objective, it just became primary objective number 1. Right? They need to get out of this thing, and that's the point that they need to do it going into the lunchtime session. They get the pierce through it. Now they get their objectives filled, and now we see all of this jostling back and forth and a gigantic bear bar response. Now, as we go into lunchtime, it's expected that this just goes a little bit more range bound, which it does. It doesn't really do much until... doesn't really do much. And that's because everybody got their objectives. And every time it hit the highs, they took a little bit more, hit the highs, took a little bit more, hit the highs, took a little bit more until it finally gave them a halfway decent pullback. But that's going into the lunchtime session and just an overall really fantastic, interesting scenario that doesn't happen very often. These huge gaps after a big month. You don't get that very often. So definitely wanted to take some time and really analyze this one. But that's going to do it for this one. Hopefully you found it useful, interesting, entertaining, all that fun stuff. As per the usual, if you have any questions or anything, feel free to shoot those to me via email, jhb@ssftg.com. Like we always say, stay safe out there, keep those stops in play, and let the winners run. Till the next time, we'll see you all then. Thanks.